Hello. Hi.
Hi, friends.
Good evening, everyone. And today, as I told you last week, that every week on Saturday, we will have one guest, one of the participants with whom I am associated because of this course. And I bring you because all of you belong from different sectors. Well, I think as for the rituals, we will probably wait for a minute or two so that everybody can join. Thanks, leaders. Thanks for joining. Adarsh, Vijay, Anirudh, Rajiv, Amar. So thank you guys. Thank you for joining. And I think if you can briefly introduce in one line, that will be really great, first of all. And second thing is like we will wait for another 2 to 3 minutes so that everybody can join and they don't feel like they have missed anything. So thanks, Ramanujaji. Thank you, Ankita, for joining. Hello, Siddharth. Right. So, Madhukar, sorry, today I mailed you people late and but still I can see a very good participation, so that's really an exciting thing. So guys, as I said that every Saturday, I've been telling you people from very long time that stock market is all about businesses, and some of us know few businesses, some of us don't know many businesses. So one IT engineer might be knowing how exactly an IT company work, or what are the revenue sources, or how one company will be considered as a good company within the IT domain better than any other guy. So we have to learn from ourselves, we have to learn from each other. And to continue this process, I got someone from oil and gas industry. And okay, Rajesh R, he is also from oil and gas industry. Great. So we have a few participants as viewers who come from oil and gas industry, and they will be, if you want to come on live, I'll be able to send you a link, and you can probably come also after the presentation. So something I want to tell you about Sanjeev ji. So Sanjeev ji have worked for a very very long time in oil and gas industry, and he worked in commercial department. So this is one department which is closely linked with every other department of a company. So who could be a better person than Mr. Sanjeev to tell you about oil and gas industry? What are the different divisions in that industry? What are the different revenue sources are there? Very recently, you saw that oil prices, crude oil price went negative for a day. So there are so many questions from you people, and I thought I might not be the right guy to tell you about oil and gas industry, and it will be better if I get someone from the industry to tell you about the same. So it's already 5:05, 5:02, and as I said, that 2 minute wait time is over. And we have many people from oil and gas industry. Ashish Bansal is there. Then we have Madhukar. Hello, hello, Dr. Vivek. Thank you, thank you, thank you. So over to you, Sanjeev ji. It's all between you and other learners. It's a very small community. I call it a family. So a family learn from each other. Seniors teach juniors, juniors also sometimes teach seniors. So over to you. Please share your experience. Please tell about the business, and also after your presentation, you got a small presentation. After your presentation, people will ask their specific questions. Guys, you can ask any question. No question is a bad question. Nobody is expert here. That's the beauty of this live thing. We all are trying to learn from each other. There is no end of learning. So over to you, Sanjeev ji.
Thanks, Kundan. Hello, everyone. Um Myself, Sanjeev, as Kundan introduced. I worked in India for like Essar, Adani, Cairn Energy, and currently I'm working with Halliburton in the Middle East, basically based in Saudi, and handling MENA region, basically Middle East and North Africa region, the contracts and procurement section. So basically, we will talk about oil and gas industries, which comprises of basically mainly three verticals: the upstream, midstream, the downstream. Many of you may be aware of these terms. Many of you may not. Basically, the upstream industries is basically is mainly related to the exploration and the production, from where you get the crude oil. And the midstream is basically, it involves your transportation, where you have the pipelines, the shipping, and somewhat it's also consists of the processing of the crude oil, and then further is transporting it to the the refineries and all. And downstream is basically is the refinery, and then the marketing. So we'll talk about this session will be mostly focused towards the upstream industries, and I'm basically have been in the last 20 years in the upstream industries, which is the exploration and production. So how the oil is produced, what is the regime of the oil and gas industries, what is the operator, who is the service provider, like what are the different companies you have, and what kind of business they are involved in, and the entire supply chain. So we'll talk about one by one. So the upstream industry is basically, as I told you, the exploration and production of oil and gas. So you have in this the onshore drilling, the offshore drilling, then we have a deep water drilling, we have a coal bed methane, and we have a shale drilling. So as you know, this onshore drilling is basically is nothing but we drill on the land surface, and the offshore basically we drill in the water. You have a shallow water, you have a deep water, you have a ultra deep water, and to drill in those depths, basically you have a different types of the drilling rigs or the drilling platforms through which we drill. Then we have another kind of industries called coal bed methane, which is like it came up in the last, let's say, 15, 20 years when the oil prices jumped to around $120. And the industry were basically looking after many alternate sources. And so the one of the exploration, or one of the basically conventional, we can say, the production of gas is the coal bed methane. So as you know, the coal has basically the methane gas, and almost 95% and plus, and then little bit some other gas like butane, propane, etc., etc. So and then we have a shale oil, which is primarily is in US. Now let's talk about the upstream business in oil and gas. So in basically in the upstream business, you have there are two types of industry. One is the operators, we call it, and the other one we call it the service provider. So the operator is basically a company like, let's relate it to in an Indian environment. You have a Reliance, you have a ONGC, you have a Cairn Energy. They are called the operators. So basically, they have oil blocks, basically, and these oil blocks are awarded by the government of India and under the production sharing contract. So basically, what does the production sharing mean is the government of India, when you assign or award a block, you have a regime wherein government says whosoever bid the highest, basically, and they are the winner of that block. And these winner are decided based on what benefits the government is getting from each of the bidder. So let's say there is a block, any XYZ company wins, and somebody says, okay, I'll have a production sharing with the government if we are successful. So we will share the oil around 35%, and 65% the operator will keep. So, and somebody says that no, that I'll offer you 30%, and the operator will keep 70%. So whoever the highest bidder, the government will award basically that block, and that person he starts basically exploring the oil and performing the oil drilling activities in that block. Now, in India, this oil and gas industry is highly regulated, especially the upstream business, the exploration and production, where at every stages you have to run to the government and keep taking the approvals, right from the award of the contract or the license of that field until every stage, like even the well approvals, where you want to drill, how you want to drill, the expenses, etc. Everything is basically is monitored by the government. So the operators, once they take the block, They basically perform the various activities. Let's say, for example, it starts with the seismic activities, and based on the seismic activities basically gives you the preliminary findings that whether this particular field where this block is awarded by a government has some potential. So basically the basic data government always have when they go out for the auction of the field, and the operators, they evaluate the data based on depending on their expertise, and they decide that really it is basically prospects or not, and accordingly they bid. So once you have the seismic thing is done and the data is interpreted, you decide where to drill, and this is how the process starts. And so the operator starts drilling, and all the expenses are basically is borne by the operators. The government shares nothing. So in India, the regime is like this. So if you are an oil and gas operator and you won the block, the government says you come up, you invest all the money in oil and gas, basically the until you discover the oil, okay, and then even after discovery, all the expenditure which you are making in processing, transportation, etc., you can claim against the revenue. So government is basically not contributing anything. They are not basically putting their own money at all. So all basically what they say, we don't have money. You come up, you invest the money, and if you struck a oil, you recover it. If you don't strike, it's your loss. Just get lost. So we are not giving you anything. So let's say, for example, the Cairn Energy, they struck the oil in Barmer. So initially, that field was basically owned by Shell. Shell thought there is nothing in that field, and finally that field was, it was sold to basically, you can, in oil and gas language, we call it farming. So the farming agreement was done between Shell and, the Cairn PLC. That time it was based in the London. Now it is owned by Vedanta. So they took it, and they drilled 17 wells, and in all the 17 wells, they could find nothing in that Barmer field. And the Cairn PLC was that time was a very small company, and they were almost turning kind of, let's say, the bankrupt. And the people were worried. And the Bill Gammon is the CEO of that time. He said, guys, don't worry about it. Let's drill one more well. And then the Cairn India drilled one more well in Barmer Mangla field, and the huge oil discovery was there, around 60 meters of thick oil. The formation they discovered, and that's it. And that's how the whole process started. Now during that time, the problem was the discovery was a joy, but when they found the oil is as thicker as, you can say, the tar, so how to produce it and how to sell it and who will buy it. So it was a big challenge. So many of you may not be knowing, the Cairn India is one of its kind, a country in India worldwide, has a 700 kilometers long pipeline from Barmer to Jamnagar, and this pipeline is continuously heated and maintain a temperature of around 55 to 60 degree, okay, just to keep the oil flowing. So in a winter time, when the oil gets produced from the well, and if you don't maintain it, if you don't keep it heating, basically the entire pipeline will be just stuck. The complete pipeline will be not flowing. It will just stuck like that. So so you have a pipeline insulated with a heater, and every 5 kilometers you have a power supply, and that's how this pipeline has been working for last 15, 20 years.
So
So
one
yeah,
second, sir. So I want to just give you probably a breather of 2 minutes,
yeah,
and let me summarize whatever you have explained, so that you can tell me whether I understood it properly or not. You can consider me the representative of all the people who are watching right
right.
now. So, so guys, many of the time you people ask whether why suddenly one stock or one company stock start rising and get triple, 4 times, 5 times, or even give 10 times return. So you can see the way, as I keep telling you, that Gyan is all around. And if you want to be aware about the stock market, you have to see that it's very much related with how we behave personally in our life also. So he was telling about Mr. Bill Gammon, if I remember the name correctly. So he's one person who probably would have bought this this unit from Shell at a dirt price, and then he never lost hope, kept drilling, and then he drilled one well where he got almost like a gold mine. So crude is also considered as black gold. So probably he got that black gold, and no doubt that would have turned around the company, and it was the time that this company, which might be even trading at 5 rupees, would suddenly go to 50 rupees. So these kind of things happens in businesses, and so it happens in the stock market. And apart from this, Sanjeev ji explained about the upstream businesses, or what exactly is the role of upstream business. Hope uh, I explained it right about this
Yeah,
incident which
correct.
you told about Shell and Crane. Okay, over to you, sir.
Yeah, so rightly said in terms of the stock prices. So imagine a company who is in exploration and production, and all of a sudden they discover the oil. So, like while you get the information late, there are insider who gets the information early, and this is how the this the stock prices will start shooting up without even by the time you realize, the prices are already three times or four times higher. So. I was sharing the cane in a story. It's very interesting. So once the oil was discovered, the people were worried that how to produce it, and the cane production is around today around 125,000 barrels. One barrel is roughly around 160 liters. So you can imagine 125,000, 1,25,000 barrels. If you multiply it by 159, and then you add it by the trucks, like in a one truck or trailer you load around 20 kl. So you can imagine it will run into, like, say, maybe 300 or 400 trailers or trucks every day, which is not feasible, basically a solution. And also there is every chance that oil is getting basically is just settling in a tank of all the trailers or the trucks. So that was a very exciting news, but at the same time, it was a very disappointing news for Kane. But then there were people, they found the solution, and the chief executive officer that time, this Bill Gammon, they started looking for the funding and the solution that how can we produce and how can we transport. So they were looking for that, and you require basically a lot of funds. This, especially the exploration and production business, you got to be very very deep pocket. Like one well, onshore well, if you are drilling of around 2,000 to 3,000 meters deep well, it will cost you roughly minimum around $10 million per well. So let's say 17 failures, around $170 million he spent just for nothing. And before that, he must have done the seismic, the land procurement, so many manpower, and those processes roughly take 3 to 5 years. So you got to know like how deep you got to be, and you should be very high risk, high gain kind of this energy, this industry is. If you don't have a capacity or to take high risk, just don't, you just cannot simply get into this oil and gas industries, especially in places like India, where the oil deposits are in, it's in bits and pieces. It's not everywhere like Saudi or Kuwait. So you really got to fight hard to really get some oil. So when the oil was at $120 per barrel, people were ready to take a risk at any cost, because the what do you call it, the risk and reward was very high. So $120 a barrel, even if people fail in 10 wells and then get oil, even 200 barrels per day oil in one well, perhaps they'll recover the entire their cost what they have spent. So this is how basically they took the risk. So they were looking for basically an investor, or they look for, then they start going to the banker. And mind well, I tell you one thing, in oil and gas, unless you discover a oil, no banker funds you. There is no loan available for this kind of industries unless there is a discovery, because you are venturing in a very unpredicted territory. You don't know whether the oil is there or not, and bank basically they'll not take any chances. So you got to have your own money to basically venture out in oil and gas, especially the exploration industries. So they were looking for bankers. They were talking about to the bankers for the the funds, and they were not getting success because they're saying, guys, you can't produce it. It's so different. It's difficult to produce. So even though you have a oil, we are not sure you are able to produce or not. So I think the Rahul Dhir was a senior position that time, I think, in a stand chart. So while he was talking for a funding, he said, "Don't you know what? You have discovered the oil. Don't worry about if stand chart is not funding you. You can get funding from anywhere." So the Bill Gammon said, "I'm sorry, I'm not able to get it." So he said, "No, it's possible you can get it." So he said, "Do one thing. Why don't you join us as a CEO and you arrange for this funding?" And this is how he joined Cairn Energy as a CEO that time. So this guy, he joined it, and he basically started with the funding, arranged the funding, and then he subsequently went with a public issue, which was, I think, 10 rupees. Subsequently, it went up to 300 rupees. And he was the guy who basically drive this cane up to here. And now 5 years back, Vedanta has taken over, and this guy has taken this company 20 years back. So the hopeless management at all. I'm sorry to say that, but this basically Vedanta is basically a mining company, who deploy the forklifts or the excavators. Sorry if somebody is from Vedanta, and and then they think that the day they took this company, they said, guys, okay, so you sold me this company saying that you can produce 300,000 barrels a day. Now you are producing 150,000 barrels a day. So within 1 year, I want this 300,000 barrels a day. And people were saying, guys, come on, how? It's not a like mining where you just go and keep digging and put the more forklift and excavator, start, basically getting more production. That's not going to happen. And everybody, I mean, all you, more of you, if you are in a stock market, you must be knowing the company and the management. So is one of the not very exciting management, and this is how the cane is not a cane which used to be last 20 years. So this is a short story as far as the Indian oil and gas, especially the cane success is. In 2007-8, when the depression was there, this what do you call it, recession. Even that time, the oil crashed, but it crashed for a very brief period. It came down to around 27, 28, but very quickly in 6 months' time, it just came up to, let's say, around 29, 45 or $60. But this time, right from 2014 until now, there is almost a very long streak, around 5 to 6 years, and the oil has been struggling somewhere 40 to 60, and is just not able to cross that limit. Okay, and because of this pandemic, the COVID, you must have heard the oil also turned negative. Why it turned negative, we can talk about it. But before that, I'll give you some global, basically, the name of the companies and the countries who producing how much, and who are the major consumers, etc. So, and then we can get about that pricing, how it gets driven out, and who drives it, and what happens behind the scene, and then some geopolitical tensions and geopolitical situations also. So we can touch upon depending on the time, because if we I'm sure you may like to have another session on this, and even 10 session will be less if we keep on going on this oil and gas E&P business. And I'm telling you, it's really exciting one, and people enjoy it. So let's talk about the major producer. And we talk about only five guys. So of course, the US is number one today. They are producing almost 20 million barrel a day. Then followed by Russia, which is around 12 million, and Saudi has been producing around 10 million, 10.5 million barrels a day. And then follows, the Kuwait, Iraq, and these are the 5 million or 4 million barrels. and the Iran producing only 2 million barrels. And the other country like China also produces around 3.5 million barrel. And the North Sea, which comprises of your like Norway and UK and all, they all together forms around, let's say, 3.5 million barrel each. And the total global production a day before pandemic used to be 100 million barrel a day. Okay, which in the month of April, when the everything was shut, you can imagine like what would happen to the production, because the consumption was almost down by 50 to 70% in many countries. And the oil producing companies, those who are producing, they just cannot shut the wall. So they can do it, but they can do it slowly. And then there is a game. It's like I think it's the games people play. So let's say you have 100 different companies and everybody producing at certain level, and consisting of 100 million barrel a day. So if you take a lead, let's say Saudi takes a lead saying that, guys, I am going to reduce the production by 200,000 barrels, or let's say 2 million barrel a day. But what about Russia or US? If they are not reducing and the other countries who are not reducing, basically it's leaving no impact on the overall the pricing. So it's going to just go down. So why, in that case, why Saudi will say, guys, why should I take the pain and only I lose my market, and why should I reduce my production? So unless you all come together to control this pricing, because which is just going southwards and it's touching to zero or whatever. So unless you all coming together, we are not going to. I am alone not going to basically take an initiative and reduce my thing. And mind well, as you know, there are many countries they are just dependent on the oil. Even the Saudi economy is nothing but on oil. So entire Middle East, you talk it Saudi, Abu Dhabi, Kuwait, Iraq, Iran, and Qatar. They are all basically Libya, Syria. They are all basically oil-driven economy. Even Nigeria to a great extent, because even Nigeria has nothing. So
So sorry to interrupt you, Mr. Sanjeev. So,
yeah,
is it the same we call OPEC countries, oil producing, oil and petroleum exporting
yeah,
countries?
yeah,
There's
yeah, yeah, yeah.
13
OPEC.
countries organization being built to represent them. We call them OPEC country. So, one
Right.
more question I wanted to ask: where does India stand? So, out of the 100 million barrel per day production which is happening at the global level, how
Yeah.
much it would be for India?
Okay, India production is very low. Let's say India production is around 700,000 barrels a day, which is less than a million barrel.
Less
Okay,
than a million. And what will be the consumption by
and
Indians?
India consumption is before pandemic it was 4 million barrel a day. So we are just producing 20% of the total, roughly 20% of the total oil.
Okay, thank you. Thank you. So, guys, two important things which I found out here is like India only able to produce 700 K barrel out of 4 million requirement. So we import it obviously, and we import it heavily for our consumption. And OPEC countries, Sanjeev ji was talking about, I'll again give it to him. So someone is asking, what is the reason for such low production in India? I think the reason could be very simple. We don't have it.
Yeah, you don't have it. It's a natural thing. So it's all everything has gone to the Muslim countries.
Okay. So, yeah, I mean, some people are blessed by oil, some people are blessed by hardworking people. Anyway,
But
over to you.
it's good that we don't have that much of oil, because if you see all the oil producing countries except US and Russia, and you see the what's happening in the entire Middle East, it's basically curse for them. They are not in peace. Every day there is a problem, geopolitical tension. You talk about Iran, you talk about Iraq, you talk about Syria, Libya, Algeria, Yemen. You talk about all these countries, they are in a deep, deep trouble. And this all in a back of it, if you go and talk, it's all about the oil. So the war in Syria, I'm sorry, a bit deviating, but I think that will help you to understand the overall industry. The
It's
Syria
fine.
has a very big, basically the gas reserves in the middle of the Syria. Now, Saudi wants and influence Saudi and US together. They want to influence and have a control over that. So they have their puppet government, and then they can take that gas through, Afghanistan, Pakistan, and Saudi and all. To There are two ways. From there, you can easily go to the Europe, and then you also come to the India towards this Asian region. Okay, so this is the major basically fight behind that. And the Russia and Iran, on the other hand, basically they want their influence on the Syria because they can easily take that gas to the Europe. So entire Europe is basically supported by the supply of gas from the Russia. So, and Russia is basically a biggest supplier to the entire Europe. The other thing you can imagine, like today, the oil condition, the pricing is so down, in spite of all those problems which you have in Libya, Algeria, Syria, and Iran. Just imagine if the geopolitical situation is normal, and Iran, Syria, and Libya they start producing, which they are rich of the oil, they can easily pump in around 10 to 12 million barrels a day. So this you can imagine where the oil price will go. Okay. So let's talk about. I talked about the major producer, and we talk about the major consumer. So major consumer also, the US is basically 20 almost what they produce, what they consume. So they are not net exporter, not net importer. More or less, they are self-reliant or self-sufficient. China next is the biggest consumer. They are almost around 13 million barrels pre-pandemic. Okay, and then after China, it's basically followed by the entire European Union, which is around 15 million barrel, and then you have, of course, India, Japan, Russia, Saudi, and all around 453 million barrels kind of the consumptions. Okay. Now, what has happened to the oil in the last 20 years? Let's discuss about this. Let's talk about this. Uh, if you remember, for the last 50 years, everybody was talking, the guys save oil. The oil will vanish. Please save oil. Nobody could imagine the situation would come where that the oil price will be zero and even negative. Okay. So what has happened? What dynamics have changed in the last many years? And let me tell you, still there are a lot of oil which can drive this world for more than 100 years. And this is uh, in a situation where lot of companies in the last 7 years have wound up because of this crash in the prices. Even let's take, for example, in India. In India, in 2000 to 2010, there were many small operators coming from Canada and US, and they were the operator here, taking the small field, and they were operating like Canada Resources, Indian companies, Geopetrol, then Geo and Pro. So like that, there were around 8, 10 different small companies operating in India, and they were having a small fields awarded by government or the ONGC as a licensee. So let me tell you what the license is. So ONGC has already a field they have produced, but now ONGC field thinks that this is a small field and it's not feasible for us because of red tapeism, and there are many issues, inefficiencies and all. So what they do, they just simply pass it on to a small operators, saying that guys, you take it, and we have a production sharing contract of around 70-30 or 80-20 kind of, and you keep operating. So when the oil was 120, a lot of foreign companies came in India, and they were basically exploring, and they were producing, and there were a lot of jobs here. And we were too, we were very happy that time. But today you are left with just 3 or 4 guys, and that too, they are not producing much, and they are basically firing people. So oil and gas industry as of today is in a very depressing condition. It's going to remain so in maybe at least 1 year, because this pandemic has come up. And even after 1 year, it's very difficult right now to say what will happen, because a lot of renewable energy and the clean energy and so many things are coming up. So let's come into the point. The point is, you have a major consumers and you have a major producers. And so what has happened in the last 20 years, the China was growing more than 12-15% year. If you see the China from 1990s until 2010, they were growing more than 10%, 12%. So the hunger for the oil was always there in China. Okay. There was no major recession after 2008. So everything was, so people were consuming and industries were producing oil. And the new entrants were coming and they were also discovering oil and they were also started selling in the industries. In late 2000, the major change has happened is the shale, the discovery of the shale oil, which is in primarily and dominantly in US. So what this shale oil is basically a normal oil, but the only thing is the rock which you have from where the oil comes, okay, is a very, we call it very tight reserves or the tight oil. So you need to be, so you talk about, let's, how can I explain you? Basically, in a Saudi, when you produce the oil is coming automatically on a surface because of their own pressure, because the oil always have condensate. Condensate, I mean to say it has a gas associated with it. Okay, so when you drill and you basically drill a hole and you enter into that reservoir, automatically the oil starts pushing up because it's the nature of the oil that water will keep going down and oil and gas will keep coming up. Okay, so because of their natural phenomena, the pressure and temperature will push the oil to come up, and this is how the oil is getting produced. And along with the oil, always there always be a some condensate or the gas. So once the gas is basically completely out of the system, the oil will remain untapped in the surface. And then what they do, you put the artificial lift. So we call it artificial lift, like you put the submersible pump. So you put the submersible pump and you start producing it, because now is no more of self-producing wells. So this is how the oil is produced. So, in a case of shale, because it's not a sand, normal sand, let me explain two more terms. There is something called porosity and permeability. So the porosity is basically the flow at which the oil can travel through the sand, and the permeability means how much that rock or sand can store the oil. Okay, so in case of sand it's very easy. Now in case of the shale, it's a hard rock basically. So in a hard rock, if you have to produce and you don't have the porosity, the basically you call it the gap in the formation wherein the oil can travel even though it has the oil. So what we do is we have a technology called fracking. So we call it fracturing. So it's nothing but, so let's say, it's in a simple term, I tell you, you go and blast something. So in 2000 and in 1,000 meter deep, what you do, you drill horizontally. So why you drill horizontally? Because in a horizontal drilling, your basically reach to the depth of the oil is more. In a vertical, you can access only this much of area, but in a horizontal section you can have very long, the access to the reservoir. So this is how you do the horizontal drilling in case of the shale oil and many other fields also, but primarily in shale we do the horizontal drilling. And then you go into that formation, and then you have a, on a very high pressure with the chemical and the sand, you pump it at such a high pressure that you know it fracks the formation. And when it's cracked the formation, the oil starts flowing, it makes their way, and it starts coming to the hole, and then this is how you produce it. So this technology, let's say, it came up somewhere around, let's say, 2000. Prior to this shell, the US were producing around 12 million barrels. So in the last 20 years, the production from the shell has been around 8 million barrels a day. The Russia, in the, if you see the, if you go and Google it out, the Russia production from 5 million has become 12 million barrels. So we are talking about Saudi, but it's not Saudi. It's Russia who is the biggest producer next to the US, and they are the biggest exporter, the Russia. And so what has happened in the last 20 years? While the consumption has gone up, at the same time, the production of oil has also gone up. And in the last 5 7 years, the economy have slowed down. Like China is at 25 years of the GDP, lowest GDP. They're at 3%, 2%, or maybe 5%. I don't know. I mean, not that much. So their data is reliable or not, I don't know. But this is how it's like 4%. So from 12% or 13%, their GDP is like roughly around, let's say, 3 or 4%. India has also not been doing very good in the last 5 7 years. Okay, their GDP is also down. So, and the other global economies are also not doing very well. So while the production has gone up, the economies are not doing the same way they should have been doing. And so, as long as there was not a mismatch, the demand and supply, the price was maintained. And as you know, once the supply goes up, of course, so and the demand is not able to match, the price will collapse. So this is what has happened. So the production has gone up so much that the price started correcting, and it started correcting, and then it came to around 60. And ideally speaking, 60 is the ideal price for oil. 120 was also very unrealistic price. Very lot of economies will not sustain that kind of price. But I believe 60 or 65 is like ideal price for oil and gas industry to sustain. Because in India, I talk about ONGC on Oil India. There are two public sector companies. Their OPEX itself is around $35 a barrel. So today they are just making almost nothing. They are just making kind of not even able to meet their total expenditure. So they have a royalty, and they have a the OPEX and the CAPEX all together is roughly around, in India, is around $30 a barrel. So they will find it very difficult to sustain if the price remains for another 1 year. Even Cairn, company like Cairn India, they'll have a very, very extremely tough time to sustain in this kind of market, because Cairn has a very thick oil. So the price of the Cairn, if the Brent crude price is less 30, the Cairn gets hardly 24 or 25. So they basically sell it at a discount price. And this in this kind of situation, where the prices are running low, nobody is looking for a bad oil. Everybody is trying to buy a clean, good, light crude. So let's say the country who were producing the thicker oil, they are in a deep trouble. Nigeria, there
So,
are many other countries.
yeah, yeah, sorry to interrupt you, Mr. Sanjeev. So, I just wanted to know one thing. You mentioned about Cairn Energy again and again.
Mhm.
And is it the only company which is producing crude in India, or you have other names as well?
No, you have a Cairn India. You have there is another private sector company called HOEC producing not much. Then you have a Oil India. You have a ONGC. You have a Reliance.
Okay. So,
So
ONGC is upstream only?
they are all upstream. Yeah, of course, Reliance. They are the industry. They have a like everything, telecom and all. But oil and gas, ONGC is purely upstream company. Uh,
Okay.
of course, they have a vertical like Mangalore refineries and all. They have recently also acquired the one of the refineries, like which one, the BPCL or something. So HPCL or something. I don't HPCL, I think. So they also upstream as well as in a downstream as well as in the midstream. So they have a pipeline, they have a refineries, and they are also into the exploration.
Right. So, upstream is the one which basically take out the crude, right?
Right. Upstream is basically the one which deals with the exploration business. That's it.
Exploration and extraction both, if I'm not
That,
wrong.
that's what we call it. Yeah, extraction, exploration and production. Yeah.
Exploration and production of crude.
Crude. Yeah.
And there you said we have Cairn Energy, HOEC, Oil
We have
India, ONGC,
ONGC and Reliance.
and Reliance. So Reliance is of that offshore one, the KG6 basin, or they
Yeah,
also have
primarily,
also.
but they also don't have that much of oil. They are mostly have a KG-D6 gas.
Correct, correct,
Yeah.
correct. So I mean, we when we hear about Reliance, I think we know Reliance more of a refinery company, which refine the crude oil and
Right.
right, right, right.
Right.
So
It's
is
not a major
HOEC
player as such,
in
because
India?
it's not a very big player, Reliance, in a global scale. I tell you, like, it's only India is totally producing 700,000 barrels a day. Out of that, around roughly 450,000 barrels a day, ONGC and Oil India must be producing. So the other 200,000 Kane is producing around, let's say, 125K. So other is not producing even 10, 20K or 30K, something like that. So it's a very minor players.
So still, Cairn Energy is the largest player in Indian
No,
sector.
ONGC is the largest, followed by Oil
Oh,
India and then the Cairn Energy.
okay, okay. So
Yeah.
that's the reason why we see such a huge drop in the prices of ONGC.
Right.
All right. So I just want to interrupt you here and also tell you that we are past 45 minutes and constantly people are asking questions as well. And
Yeah.
since for many people, this could be the very first time they would be knowing about this industry. So
Yeah.
maybe it would be a good idea to take questions. And
Yeah.
then if they are still interested about understanding the middle stream or the downstream, you can probably explain that as well.
Okay.
Right? Yeah. So, guys, I know you have been asking questions. So, before that the session gets boring, let's jump to the questions and see whether Mr. Sanjeev has his opinion or the answers. Though what we have observed that whatever the opinion he have very blunt opinion, be it about OPEC countries, be it about geopolitical situation, be it about a management which ruined a company, according to his words, Cairn Energy. So, as I have taught you people in qualitative analysis, that when you're going to invest into some company, the very first thing which you have to see is the quality of the company. And the quality comes from people who are managing, quality comes from the sector in which these companies are operating, quality comes from a company, how it's treating its employees, how ethical they are, how good they are in terms of corporate social responsibility, and many other things. And you could have seen that we have a live example where Mr. Sanjeev explained you in his own words that he didn't like the management of Kane from day one. And he probably made a very, I mean, I can't make a blunt comment because I don't come from that industry. I don't have knowledge also.
But
But
Kundan, sorry, I'll add it here. Even today, you see, they recently came up saying that they will buy out the minority shareholder at 86 rupees per share, the entire Vedanta price, Vedanta shares from the market. The book
right.
value of this entire Vedanta group is 170, 180. They will buy the minority shareholders at 86 a dollar. And why they want to buy it and go private? They want to be a completely private entity. Why? Because they want to simply suck out all the cash reserves which Cairn India has on its balance sheet. Because being a private company, they will not have any kind of reporting structure to the exchange or SEBI, and they can easily do it. There will be no objection. So this is basically a backstabbing to the entire investor who is having a book value of 170, 180, and then he's buying, saying that I'll buy a share at 180, sorry, 86 rupees per share. So you can imagine what kind of, this is definitely not an investor friendly company. If anybody investing in this Vedanta group, just be careful.
Okay.
Yeah.
So my job as a teacher is not to give any kind of advice, either in pro or against. And that's the reason I think that this initiative is going really well, that people like you who belong from the learning community can make these statements and make other people aware. And obviously, we are not afraid of anyone in terms of telling the truth. So thank you very much, Sanjeev, for giving such a blunt opinion and making people aware about it. And I would also like to learn more from you on this topic about delisting the Vedanta share and present it. This has been long pending from me, also for my learners. But nevertheless, a session happening at the right time by a right person is what I can tell you right now. I'm loving it. Hope other guys are loving it too. So, guys, I'll pick up your questions now and give it to Mr. Sanjeev. Obviously, he's not a stock market guy, or he may not be knowing everything. He's one among you. Tomorrow you can be here on the same seat explaining about your industry. So let's see how exactly we can understand through. Yeah, thank you, sir. So someone, Amlan Karmakar, is saying thank you to you, Mr. Sanjeev, for all your blunt opinion about Vedanta and Cairn Energy. And this is what I also do in my classes.
No, it's not an opinion. This is basically in a public domain. All these basically this information now is in public domain. So it's something I'm not speaking, which is basically Vedanta should offend about it.
Okay, great, great, great.
Yeah.
Thank you, thank you. So we have Milind. I'm now directly jumping to the question. So Milind Pawar, what is effect of electric vehicle on oil prices and companies having any oil related dependency? Do you have any
Okay,
idea
I'll
about this?
the total consumption of by the passenger vehicle globally, if you Google it out, you will find is not even 7%, somewhere
Wow.
around 7 to 10%. Okay, so this electric vehicle and all is not going to make oil and gas industry looking vulnerable. And then particularly at this price, you can imagine when the oil and gas is at $120, and when our price is, we are buying a fuel at, let's say, 200 rupees a liter or maybe 100 rupees a liter, then we can say that yes, we can go and buy a 25 lakhs of hatchback. So a simple Hyundai i20 size of car will cost you around 25 lakhs, a electric car. And every 4 year, you got to change the battery. And when you change the battery, you'll end up spending another 12 lakhs. So tell me, like, who in India, a country like in India, is going to basically buy a electric car? This is the one reason. And the second reason is, in this 45 degree of temperature and the traffic of Delhi or metros, where the average speed is not even 5 kilometers per hour, what will be the average for these electric vehicles? You sit in the car, and instead of driving 200-kilometer range, you will land up draining your battery in not even 30 kilometers, because that will take you 5 hours. So I don't see any hope for this electric car, at least in India. So basically, this is much suitable for a European country where the environment is clean. People can open the window and they can drive their car. The temperature is nice, so they can do it. But that's not going to make difference unless India, China, and US is shifting to electric vehicles. The rest of the Europe and other countries are not going to make a difference because we are the biggest consumers. So I mean, it can have some effects, but this is not a major cause of concern for the basically the pricing of this oil and gas and
Oil and
any
gas.
major impact.
So, in short, just because only 7 to 10% consumption is happening by car and domestic
Right.
vehicle industry. So,
Right.
the question here is, who are the 90% consumers, if you know?
Okay. The major consumer is basically the airline. Okay.
Airlines. Okay.
So and then you have the industrial uses, and of course the transportation like railways, the lorries, the trucks, commercial vehicles. So you have a commercial vehicles, you have a commercial flights, you have a airlines, of course you have a industries. So they are the, the major consumers of this oil and gas.
Right. So, very similar question by Robin. He has been asking from very long time. So, someone asked about the electrical, and he's asking about renewable resources. So, is it
Yeah.
feasible for renewable resources to replace oil consumption in industries for their machineries? So,
Uh,
renewable means
No,
solar
now
and
I mean, then see, look, you can do it, but then is the cost benefit analysis. Let's put it this way.
right.
Today it takes you 4 lakhs of rupees. You can put a solar panel on your terrace, and perhaps it will be sufficient to for your air con and your house consumption. Okay, let's put it this way. But tell me, 4 lakhs has a annual interest even at 7% around, let's say, 28,000 rupees, which is around uh, 2 or 3,000 a month. Okay. Now, I don't know if your billing is more than that, you can go that. But tell me, the industry, how much they will invest in that solar panel, and then you require the space, that much of space. Where do you have that much of space to put this the solar panel? This, I mean, there may be the other industries, other renewable energy, but solar panel is one of the major one, which basically we are talking about these days. Uh, for industry, near term, I don't see. If something comes up like hydrogen fusion reaction, something like that, where it produces the power in a great capacity, having those kind of reactors, maybe, but not like this kind of thing.
Great.
Okay, somebody is raising a question. Why HPCL is putting a new refinery
Right.
in Barmer near Cairn, India?
Correct.
I think this was in India. A lot of things is driven by the political motto behind it. Okay, you can have a industry in such a area where there is a no raw material for that industry. Okay, and there are many examples of this. You can set up a electric, or basically the electric company or something, the major company somewhere in Bihar, where perhaps you may not have the local consumptions or anything. So let's put it this way: you may have a power plants where you have no coals, and this is possible, but this is all political driven agenda of the political parties. So why this was announced, I'm not sure. Even if the any ceremony has been groundbreaking ceremony has been conducted there in Barmer for these refineries, and by the time they set up these refineries, perhaps there will be no oil in that Barmer.
Okay. So why? So you are saying it's just a political decision? I mean, setting up.
They have announced, so perhaps they can set it up. But
Mhm.
let just see. Generally, if you see, the refineries are always on a coastal area, right? On a
Okay.
sea, because the big tanker comes, they are near about the jetty, and you offload the tankers because you take the crude, you refine it, and then from the same tanker you basically you export it or you transport it, right? So is basically it's a supply chain issue. So if you do it, you will not sustain. Basically it's a issue sustainable, the question of sustainable. Of course the government has many the social responsibility to do it, so they can do it, but as a private investor, if you have to do it, I think you will not be able to do it, and you should not do it.
All right. Okay. I got few things out of it, not completely, but anyway. So we got a question here from Vishweswar, and this is one question probably I would like to answer. So Kundan sir, is there any way retail investor in India can benefit from the price fluctuation in crude? Is there any way we can buy and sell? So Vishweswar, one thing I want to tell you that yes, you have derivative contracts on MCX. You can go and buy crude. So MCX is another exchange, which is a commodity exchange. The way you know NSE and BSE, you have MCX, and you have commodity future and options there. Commodity future, especially for crude, is there. But the question here is, do you really want to trade? Because trading in derivative or any other instrument without understanding their, the basics behind it, that why the prices are fluctuating, is nothing but a gambling. So it was my job to tell you that yes, you can do it. You can get benefit in India by the price fluctuation of crude by trading in derivative market on MCX. But then, as I keep cautioning everyone against trading in derivative market, because it can turn out to be just a gamble. There is a very fundamental theory of, if the fluctuation is very high, it will hit you very hard emotionally, and you may get into the trap of trading and lose a lot of money there. So be very cautious. However, you can simply ask that why this future is there then. So see, these futures are there for the hedging purpose. As Mr. Sanjeev was explaining you, we have the consumption of crude in different industries, and those industry players may want to hedge their position. So what is happening here, that let's say I'm from petrochemical. I'm from, sorry, from this paint industry. Paint industry used a lot of crude. Now, when crude was at $20, I could have bought future contract of crude, so that in coming years I will always have this benefit of buying crude futures at 20 rupees. $20, right? So this futures should be used for a hedging techniques and not for the gambling or a speculation, especially something in crude where you really don't have enough data to backtest, honestly speaking, in India, or especially the way it has moved in last 10 years, 15 years, as Mr. Sanjeev was explaining you, it would be very, very difficult to predict the price. I'm not sure how Mr. Sanjeev will agree, but I can certainly tell you that it's going to be very, very volatile. You would have seen.
Yeah, you're right, Kundan, because you can definitely play with, but today the risk reward is very bad. Basically, 90% of the time, I think you're going to lose it because you don't know where the crude is heading. I mean, we can perhaps may have another session because there are a lot of dynamics and all. I can take another 5-10 minutes to explain this pricing thing so that that helps you. And if somebody is interested in trading and all,
Sure.
basically that will give you insight and perhaps will help you to take a wiser decision and not venture into this crude thing right now. So, coming to why the oil price turned negative one day. So basically, it happened for the WTI crude, basically West Texas Intermediate crude we call it. On our website, you will find only two types of crude basically trading: the WTI and the Brent. So Brent is basically for the North Sea, whereas like the UK and Norway, they are producing and they call it Brent crude. So, and somehow the name was derived from four fields the shell was operating, and based on that, they named it Brent crude. And similarly, you have a OPEC basket. So OPEC producing countries, they say OPEC basket. So OPEC basket have a different rate. So as you know, the mind well, the WTI basically trading is basically has the physical settlement is not like a Brent crude where you have a cash settlement. So on expiry. So on a WTI, let's say, for example, you bought a future of, let's say, 20th of April, okay, at X dollar. And all of a sudden, this pandemic happened, okay, and then everything was closed. And people were storing the oil in that. There is a place called Cushion in Oklahoma, that is Texas, where the entire crude, this WI2 crude, the individual producers, they transport it, and the crude is getting stored before they actually basically are distributed inside the US or even exported. Okay, so there was no place to store the crude on the date of the expiry, and you wanted to sell it, but there was no buyer. So you basically had positions which basically you bought it and there is no seller. So if you don't have a seller, basically you were supposed to take the delivery of the crude. Now you don't. You are basically just a trader. You are not basically the stockist. So you can stock that crude. So all you said that cushion guy, please stock my crude. He said, sorry, I don't have the space. So, and there is no, you can't sell it. So the guy who is buying your contract, he said, guys, look, I will buy it, but I will also charge you the storage price, which is currently $30 a barrel. So, I mean, this is how the price went negative because of the physical settlement and the no place to park that crude. So this is one of its kind. It's happened in the history. Perhaps it never happens, but today also I tell you there is a big supply glut in production and the actual consumption. So even though the global industries have opened up, the production is still 100 million a barrel, and the consumption is far low. And people were trying to fill their storage over the last 2 months. It's almost nearly full. Okay, Saudi has cut down the production to around 250,000 barrels a day from 1st of May. And similarly, Russia has agreed to cut down the production. Total production cut down is around 9 million barrels a day, which is roughly 10% of the total global production. Now, the consumption is still not 80 million barrels a day. So still there is a supply glut of more than 10 to 12 million barrel a day, which is basically going into the market. So I I easily say that similar kind of situation it might trigger anytime, maybe now, maybe after a month. So it's a very dicey situation right now for trading in a crude.
Excellent, Sanjeevji. Thank you. So, actually, guys, we generally plan this session for an hour. So, I think he has taken some questions, and still, you people will have more questions. And what we can do that we can have another session. This session will be recorded, and good that Sanjeev ji picked up that pricing thing, because that was also the hot topic to discuss, and he explained it to us. So guys, can we I know you people have more and more questions, but then I have asked for 1 hour of time from him, and I'm sure giving a 1 hour presentation is a tough job as well. So thank you all. Thank you all for coming and attending this session, asking questions. What I would do is I will open up a blog, especially on the oil and gas. So I have been noting down whatever Mr. Sanjeev has told. I will write all these things on a blog. And what you people can do is you can ask a question below that blog, and I'll share the same blog with Mr. Sanjeev. If he is happy, he'll keep responding on your questions on that blog. How is this idea, guys?
Yeah. Okay.
Yeah. So, Mr. Sanjeev, we have a blog and blog for the learners. So, what we can do is we can make a blog, and I'll share the blog link with you. You can log in there with your Facebook account. Okay. People will connect with you also if you are comfortable. And yeah, PowerPoint presentation can be shared. I'll email. Okay. So guys, I understand we always have questions, more and more questions. Learning is having a never-ending process. I'm more like in a teacher role right now, so I have to keep telling you all these things. Learning is a never-ending process, obviously. So you can keep learning by asking more questions. Mr. Sanjeev can also keep learning by answering your questions, honestly speaking. He may not have the answers for all the questions. He might be wrong here and there as well, which I have to tell you, because anybody can go wrong in a 1 hour long presentation, can do small mistakes here and there. Okay. But then when he'll be answering your question at ease on that blog, I'm damn sure he'll be giving you a very, very good insight. So I'll share the blog with you all, everyone. And from there onwards, it will be you, between you all learners and Mr. Sanjeev. Okay. Thank you very much. Thank you for attending. Any comment for Mr. Sanjeev, any thanking note, you can tell me and I'll read out from your behalf to Mr. Sanjeev. And apart from that, let me know anyone from any other sector would like to come next Saturday, 5 p.m., and enlightened by your own knowledge, your own experience to your fellow learners. So Mahesh Manvesh Yadav ji saying thank you to Mr. Sanjeev, and everybody is saying thank you, Mr. Sanjeev. So yes, over to you guys. Any final note from you, Mr. Sanjeev? Please share.
Uh, Thank you, guys. Thank you for listening. All I tell you that I don't have a very
Okay,
uh,
okay, I'm really sorry. I have taken up one question because this has been
yeah,
asked so
okay,
many times, and I
okay.
want you to answer this. Why Indian government is not focusing on northeast region of India?
Okay, the northeast region of India is not that the government is not focusing. Basically, oil India is predominantly there, and they are basically based in the northeast. There is a lot of oil in Nagaland, and we all know that how Nagaland is disturbed. Okay, and Nagaland is similar to what Kashmir is. They do not consider it along with the India, and they have not allowed us to explore. 40 years back, ONGC drilled around 1820 wells. They were producing, and just about they were about to produce. They just went there. They blew off everything. The entire the wellheads and everything were blew off. Even today, there you will find the oil sipping on the surfaces in Nagaland at that site, but the government simply cannot do for the Nagaland. And Assam you have, Arunachal you have, but the problem in that northeast side is the oil is in a very small pockets. So let's say the government gives you a field of 20 square kilometer, you discover a oil in some of the pocket, and based on that you do some seismic analysis and start drilling somewhere in that field. In the next 400 meters you will not find the oil. So it's so difficult that to basically really concentrate there. It's not for everybody to go and drill there. And the second thing is mine well is not the government. Government doesn't have the money to go and explore there, because as I told you, government looking for the private investor. So they say, guys, go drill, and once you get the oil, please get all your expenses from that expenditures, from that revenue, and that will have a tax benefit. You can claim all those taxes, but don't ask for any money. So in this condition, when the oil is 10, 20, and 15 $0, whom do you expect to go to Northeast and basically explore the oil where the probability is not good?
Right. So, according to Mr. Sanjeev, this is not any, vendetta government is doing against Northeast.
Yeah.
Okay. It's just that the business scenario is not preferable right now, probably, as per Mr. Sanjeev opinion. Obviously, I don't have any opinion here. So, thank you for answering, sir. And thank you, everyone, for attending the session. Everybody is saying a thanking note. You guys can also give him the thanking note on. Yeah, so people have question about RIL and Aramco and so many other questions. And as I said, you can ask these questions on the blog. Mr. Sanjeev will take time, keep answering in his free times. It may go on for a month, for a week, or a continuous
We can
blog.
have
You never know.
perhaps another session time sometime later.
Great.
It's very exciting, and as if we keep talking, I'm sure you guys. I'm not sure that how many, but I think most of you must have liked it. But yes, if you keep talking, it's very exciting field. It's something very different than the other industries, and there are many things to talk about. By the way, for Northeast thing you are saying, and why I could answer you, I have worked there for almost 10 years while being in Delhi. So I worked in Durgapur, Assam, Jorhat, Sivsagar, even in Nagaland, Arunachal, and all, while working for a company called Canaro and the Adani and Essar and all.
Great. So everybody's saying they liked it, Mr. Sanjeev. Thank you, guys. I think it was a good Saturday evening talk, and I always wanted to keep it casual between you people. So whatever the questions could have taken, I have taken. Still, it will be a very casual thing. You can ask questions on the blog, and he'll answer that. And I'll write the blog. I'll write the blog on your behalf. Thank you very much. Thanks all for attending. It was really a great session, Mr. Sanjeev. You
Thank you, guys.
spoke bluntly. Yeah, you spoke bluntly. People liked it. And truth are always blunt for sure. And a lot of learning. Thank you. Thank you very much.
Thank you, guys. Be safe.
Yeah, Corona time. Yeah, so someone was from Kolkata and he was saying that obviously the disaster is there in Bengal, so we have all the sympathy. And you can WhatsApp me. I just forgot your name. I slipped that from the comment, guys. You can WhatsApp me. We can do some kind of fundraising event within the learners. I personally will donate probably 21,000 rupees for that fundraising. This is what I can announce you right now. And I'll probably start one initiative where we can fundraise and give this to the person who was raising this point here and who can help with this money to people at the ground level. So yes, I'll do some kind of arrangement for this. I'll talk with more people. You can WhatsApp me about this. That if we want to together help some people in Bengal at this point of time, we would want to do it. We should do it. So it's a double disaster for people in Bengal, and many learners are from Bengal also, and we have all the sympathy, and we pray that you people stay safe and everything happens, for the good things. I mean, everything recovers quickly and fastly. Thank you, guys. Thanks a lot. I'll
Thank
inform about all these announcements which I have done on email, guys, and together we will see whether we can do something. Thank you very much. Thank you, Mr. Sanjeev, for attending.
Thanks, Kundan. Thanks, everybody.
Thank you. Thank you. We'll end the session now.